All right, so we got to talk about this, guys, with another mega bank being in trouble and basically the Fed raising rates and basically all the central banks raising rates in direct opposition to everybody screaming that it's going to make the banking crisis worse. And let's be honest here, guys, do we really think it's over with? I'm not sure that it is over with yet. So the consensus seems to be that the bear market is going to last well into the future. But how long is it really going to last? I mean, is it going to be 6 months, 8 months, 12 months? You know, whatever date all these people are predicting, and they basically seem so dire and so positive that it's going to happen by this date that obviously, regardless of where the right answer is, none of it can be good. The good news is there is actually some clues as to how long this bear market is actually going to last, so let's explore those today. I just ask in exchange for you to gently tap that like button and consider subscribing too. As it says, 65% of you guys still aren't subscribed, so just make sure you click the subscribe button down there at the bottom. And the March Madness sale is going to be wrapping up very soon with the tournament basically winding down, so make sure you lock in your membership price today. You guys know the deal. You get to see all my buy and sell alerts real time, my watch list with price targets, you get 5 free courses you can take, and access to the best Discord group out there and a whole ton of other stuff there. Just check out the pinned comment down there. Too much to discuss here. We got too much to get into today, so just check out the pinned comment and see if it's right for you. Now, I have said from the start in my group, in videos here on YouTube, in chats, in our Q&As, basically everywhere, that we are going to see more failures, guys. Essentially, the tide has gone out, and now we're seeing who's swimming without trunks on, or whatever the heck the analogy is. I don't want to get too far into YouTube. I don't want to get demonetized or anything like that. But the basic point is, the tide has gone out, and now we're seeing, who the good banks are and where the bad banks are. And guess what? A lot of those bad banks are finally going to go under. There's no doubt in my mind that this isn't the first, and this won't be the last either. Now, obviously, I hope it does, but I just don't think that it is. I can't imagine there's only 4 or 5 problem banks out there out of the thousands upon thousands of banks all across the world. So I do think we will see more failures. But this is nothing like the financial crisis at all, guys. Not even close to it. Back then, these two things couldn't be any more night and day than what they are right now. Now, before you blast me, slow down. I agree that it is, a bank crisis, and it is absolutely something that we need to discuss and it needs to be addressed. But to basically say it's like back then is just, I don't know what else to call it. It's almost comical at this stage to say things like that. Don't believe me? Well, let me hit you guys with some facts. That's why you guys are here. You're not here for conjectures and projections and all this other stuff like that. You guys are here for actual facts. So back during the financial crisis, do you guys know how many banks actually failed? The number is 465 banks went under during that time frame during the financial crisis. That is a far cry from the 4 or 5 that have gone under so far. And I agree, there were some large banks there that have gone under and such, and of course headlines make it all clickbaity and everything else. But to me, there is a huge difference. Definitely contagion at 465 banks going under. At 5, it's just not there, guys. And you can go back and look through any statistic that you want. It just isn't there. It's not even on the same scope, same scale, same anything from back then. So that's why you haven't been seeing me push that narrative like a lot of other folks have, because it's just simply not true. But what the financial crisis illustrates for us is it gives us a great barometer to look back and see what exactly did the stock market do during those 465 bank failures, right? I mean, that should give us some indication as to how long the bear market's going to last, how much more beaten down stocks are going to get and everything else during a banking crisis. That should absolutely give us kind of a little bit of a guide, or at least an insight into what could happen, basically from the worst banking crisis in the history of the world. I mean, that we literally almost lost the entire financial system, not just in the US, but across the world. That's how bad this system was. And remember that 465 I'm discussing is just US banks. That's not all the world banks that all went under, not like the World Bank, but banks across the world that went under or any of that sort of stuff like that. It is just simply US banks that went under. So basically taking that number and looking at the stock market and seeing what it did underneath as those banks all failed should give us at least a reasonable timeline. We can kind of make some guesses on there and kind of see which narrative, that's being pushed out there by various folks is actually the most likely to happen. Basically, the going in assumption is that as the banking crisis got worse, the more and more banks failed, the worse and worse the stock market got. And so that's kind of the premise there that a lot of these folks are pushing into their narratives and such for their timelines and such. Now remember, the market bottomed in March of 2009. That was the bottom of the financial crisis right there. So that's kind of where we got to start looking at the data and seeing what exactly happened. And when I dove the data, guys, I'll be honest with you, it was really astonishing. I kind of knew where it would lead me, but I had no idea it was so extreme and so violent in one direction there. It was almost startling how different it was and how harsh it was. and how it just absolutely just goes against what you would think would happen. So when you look back at the data, prior to, basically when the financial crisis started until it hit the bottom, only 10% of the bank failures had happened yet. So that basically means 42 out of the 465 banks that failed prior to the bottom being in. Once the bottom was hit, the rest of the 423 banks failed after the bottom was in, which of course seems totally counterintuitive to what everybody's been telling you, right? As it gets worse, the stock market's going to trade down, everything's going to go down, everything's going to get worse. And that's not actually what happened when we had the worst banking crisis in the history of the world, at least in modern times, the worst banking crisis during modern times. It didn't happen that way at all. Only 42 of the banks had failed whenever that bottom was in, and then we had the whole other 400 plus banks to go over the course of the next couple of years before all the banks had stopped. Well, not all the banks stopped failing. They continue, there's bank failures every year. But in terms of when the financial crisis was actually over and we were actually in the clear, the market had bottomed years before. And for a little more context here, 2010 saw 157 banks fail during 2010. Basically, more than a year after we set that bottom, the very next year was the worst year ever in regards to this sort of thing happening. You had 157 banks fail during that next year whenever the market started marching back up. So, basically, here we go. We got banks failing and the market going up. We see that a lot in the stock market. It's always ahead on these type things. And it seems like, and don't get me wrong, guys, it wasn't like the media and the narrative was anything but, basically this is the bear market rally, or, this is just unsustainable and it can't happen and the new bottom's coming soon and all this. And then that was everywhere across the media, guys. No matter which side of the media you watch, no matter which finance, obviously finance YouTube, I don't think was a thing back then, but across any other financial news, Wall Street Journal, all the media on TV, regardless of what you were involved in, the narrative was always, it was a bear market rally, it was a fake out. Honestly, up until about 2013, 2014 or so, was kind of when that narrative finally started to switch that, hey, we are in the middle of the next bull run here. This is the next bull run cycle. That basically meant if you listen to the narrative and everything else, you missed out on 4 or 5 years worth of gains, guys. You were 4 or 5 years behind where the bottom was because everybody was sure that the next shoe was about to drop again and again and again, and it just never happened. The bottom was in 2009, not in 10, not in 11, not in 12, not in 13, not in 14. Back there in 2009, that narrative that was pushed that entire time never happened. Basically, the narrative did not flip until we were almost 5 years past that time. And guess what happens during that time, guys? Fortunes were made during that time. That 5 years was a time to make a fortune. And unfortunately, most people out there missed an entire fortune because they were waiting for that tide to turn or for that next bear market trap to trigger or whatever the heck they were waiting on and such. That's the reality of that type of market and what happened back then during those bank failures. The kind of bigger point I'm trying to make here, guys, is anybody giving you a date, anybody giving you a scenario where if this, then that, and all these other things like that, they are all strictly guessing, guys. That's it. It's all a guessing game. And then you guys, and myself too, I can get caught up in this too, myself making decisions based upon somebody else's guess is kind of like double guessing. And I mean, to me, that's just not a prudent way to invest. I'm not saying I haven't done it before. I'm not saying I won't make that mistake again in the future, but that's exactly what we're doing when we're trying to reach for these dates and trying to reach for this time frame, or if this happens, then this happens, and all these other things like that. They're all guesses, guys. Every time those things happen, the vast majority of them fail. I'm sure somebody finally gets it right. I'm sure the people, we talked about it before. If you guess 972 times, you're going to eventually be right one, but you were wrong the other 971 times or whatever the case is. So to me, investing based upon that is just not prudent. So it's not something I worry about. I don't worry about where the bottom is. I went and looked this up to just kind of get a feel for, what exactly happened during the financial crisis. And I wanted the actual data. So I went and looked, and that's exactly what it gave me was, oh my gosh, we were 10% into the banks failing when the market bottomed. We still had another 90% of failures to go before, we actually ended that piece of the pie per se. And, again, the market just kept right on rallying during that time. Didn't matter. Didn't care about the 90% banks that continue to fail and continue to fail and continue to fail and continue to fail. Didn't care. The market was rallying anyways. The reality is the market could have bottomed last October. I mean, it could bottom this summer. It could bottom, Christmas time. I don't freaking know. Nobody freaking knows. But what I do know is you missed out on a fortune the last time it happened because the bear market narrative lasted for 5 years until finally flipping to a bull market narrative. So you missed out on that entire fortune during that time. So I'm not trying to guess any of this at all. I am doing what I know I should do and what has worked in every other crash in the history of crashes is I have and I will continue to invest during this market. Not going to guess the bottom, not going to get it right, not going to get every stock pick right, but I know long term this will all pay off in the end instead of trying to play the game of guessing the bottom of this bear market. I got my plan, I got my price targets, and I'm executing, and I'm going to continue to execute to that plan, and that's all you got to do, guys. Keep it simple. Even if it's a simple DCA, that's absolutely a great strategy and a great way to invest during times like these. And if you want to learn all those sort of things, valuations, how to, create a watch list, all those sort of things like that, take 5 free courses, talk to me in the live Q&As or jump in my DMs in the Discord or whatever the heck you want to do, make sure you check out the link down in the pinned comment for the Market Insiders private group and take advantage of that sale before it ends. And click this video here if you want to see the 3 stocks I'm buying right now, and click here to see my exact plan through this entire downturn. So thanks for watching, and we'll see you in the next one.